Bitcoin, as well as the traditional markets, have retraced post-CPI and FOMC towards their uptrending supports. The question is, will this support hold and facilitate a reignition of the uptrend, or will this support fail to hold and a new downtrend will commence? If this downtrend does commence, can it take us to new lows? Let's go ahead and jump into the charts. Okay, MegaWhale team, welcome back to the channel, guys. Thank you for tuning into today's video. Hope you're all having a fantastic day. We're going to go ahead and take a look at Bitcoin today. We're going to be talking about this uptrending structure we have over here, which of course is this rising channel. And for those of you who've been watching the channel, we've been talking about this rising channel for quite some time now. This rising channel is of course a bearish structure, meaning it's an upward consolidation between two parallel rising trend lines that eventually results in a downward break, and the downward break can obviously form a new downtrend or develop into a short-term divot before it swings back to the upside. We're going to talk about two things today. That is, number one, what happens if we do break out of this downward structure? Where will the price go? Can we create a new low? And number two, what is the price action doing here? And what did this upper rejection mean? Is this going to facilitate a potential second attempt into this range and breakthrough, or will this upward trending structure result in that downtrend? So before we get stuck into it, smash the like button, comment down below, and subscribe to our channel if you are new. Of course, you can join our Telegram channel. Second link in the description. You've got access to charts, videos, analysis, news events, and so much more. All of it is posted there. Let's go ahead and get into today's video. So starting with the market data, for the quarter we are down 10.34%. For the month we are up 1.39. So for the quarter to turn green, Bitcoin is going to need to gain 10.34% from exactly where we are now, which should take us around 19,100 if I'm not mistaken, a little bit over 19,100. This is 19,200. What we're going to do is we're going to go ahead and draw a vertical ray in here, a horizontal ray, sorry, in here. We'll come back to that later in the video. So 19,221 is where Bitcoin's going to have to reclaim within the next 14 days to see this quarter close out green. Of course, we do not do that. This will be the first instance in Bitcoin's history where we have seen 4 consecutive red quarters in a row. So pretty bad to see. Volatility is coming up just a tad. We're still hanging around at 1.68 level, and of course liquidations have dropped back down. Volume in the market has fallen back down after what we've had such a rapid surge in volume and surge in price action due to these two news events, which are now behind us. So the question is, of course, now that the news events are behind us, now that the data has come out, what will the price do? So let's go ahead and get started. And before we get into that though, however, we'll talk about the broader markets because it's quite relevant what is going on here. So first and foremost, the DXY, and the DXY has broken upwards from this falling wedge structure. It looks like it did not sustain above. It looks like we faked out above, and it has recently broken back within. So while we're below these trend lines over here, these horizontal levels and diagonals, we are still very much in a downtrend. The DXY is still very much in a downtrend. So generally what we see is when we see the DXY reaching resistance as the traditional markets and the Bitcoin reaches support, it's basically like an inverse chart. So it's almost telling us, okay, DXY is at resistance, Bitcoin and traditionals are at support. It's a greater chance that if the DXY does actually reject here, that these other markets will see a degree of support. It is exactly what we saw down over here. We saw the DXY flirting around this support level as Bitcoin was quite literally up in this higher end of the range over here, retesting an uptrending resistance levels, quite literally inverted. So not always will we see precise inversion between these charts in a pretty strong correlation, but to a degree of 0.7 or 70% of the time, they do work inversely with each other and to a pretty decent degree of correlation at that data. So looking at the DXY here, we are rejecting. We can expect this rejection to continue. Of course, we are technically still in a downtrend. This downtrend will continue until we can remain above the support level here, which is this great support block, and flip to the upside, being the next resistance point here. So of course, if we do get above here again and close above, like we're looking at 104.6, we can expect the DXY to continue to rise. Therefore, the asset prices will continue to fall. Until then, a dropping DXY is an indicator that we could potentially see some degree of relief in the market. So this is what the markets are doing. S&P 500 Dow Jones. Let's start on the Dow Jones. The Dow Jones has, of course, rejected a few times from its upper range of here. Key level, 35,000. Rejected from here, pretty strong aggressive rejection, and a pretty strong wick to the downside in the day after. We saw the price enter this horizontal support range once more. This is quite a strong support range, a support range we've been talking about for quite some time. For us to see any confirmation to the downside, we will actually need to lose this support range, and that will take us downwards, looking to touch these trend lines, this diagonal and horizontal at 32k. Until then, we are technically in support. We can develop some degree of reversal from this level, but again, looking pretty bearish over here, structurally on the daily, structurally on the weekly. Let's take a look. Again, quite an aggressive bearish candle here on the weekly. Huge wick to the upside. Very low body, signifying again our aggressive reversal in trend strength over here, signifying bulls definitely lost control at this point over here, and we have this aggressive decreasing buying pressure and increasing selling pressure happening in the market right now. This trend can definitely continue on weekly. We could see this aggressive selling pressure continue throughout the weeks to come, but of course a lot rests on what happens within the support range we are currently retesting, so definitely keep your eyes on that. S&P 500, exactly the same thing as the Dow Jones, guys. We saw an aggressive wick that got eaten up by the bears over this downtrending resistance line. This resistance line, of course, was our bear market resistance. This is our falling expanding wedge. This is our bear market structure. Aggressive wick to the downside, pushing the S&P 500 back into this horizontal support range, a range which we've retested numerous times in the past. Again, a lot of rejection, a lot of resistance, a lot of support within this range. We can see multiple instances here, here again, and over here finally. And again, this whole range over here over the last 20 or so days, or even two, or even a month, you could say, we found support at. So we're pushing back into this range now. The question is, will we find support within this range as the markets are at support, the XY is dropping, or if we do fall through here, we can definitely continue more towards the downside. So definitely keep that in mind. Again, for the upside to continue, we need to clear that local high. Bond yields, again, same thing, guys. We're in this falling expanding wedge for the 10 years. So the 10 years looking pretty decent here. Again, downtrend, expected upward break at some point. And the 2 years are in a falling wedge pattern again. So again, another downward consolidation that does usually end in an upward reversal. Looking for a break over 4.4% to see a swing up to 4.6 and potentially higher. Until then, the downtrend definitely does remain intact. Okay. Let's go ahead and talk about Bitcoin. So we've talked about the traditionals, we've talked about market data, and you can see how now it's kind of relevant because Bitcoin, just as the S&P 500, just as Dow Jones, just as what the DXY is reflecting, the Bitcoin price is signifying we're at support. And this support level is a very tight support level. It's a support level that we retested as the high in December 5th, okay, as the high point, rejection point on the 11th to 12th of November, as well as the trigger point, which you remember we talked about for weeks coming up to it, which of course happened on the 14th of December. This trigger point took Bitcoin upwards into this upper range. As we were saying again, this trigger point was going to facilitate for the move up to 18,160. We did see a little bit higher than that, but of course that trigger did facilitate. So I've actually come back down and retested this trigger. Now this trigger lines up quite well with the uptrending support line of this rising channel pattern. So let's go ahead and talk about the downside first. Then we'll talk about the larger time frame and what's happening on the macro. So the downside scenario over here, and I do want to go ahead and show you this chart over here. So first and foremost, we had quite a strong rejection. This is what you call a long-legged doji candle. Okay, this green candle over here is what you call a long-legged doji candle. It's a candle that usually prints at the ends of long continuation. So upward trends, downward trends. Generally, when we see these long-legged doji candles print, they can be inverted. They can be you can have them up way around. They can invert both ways. It generally signifies again a significant and aggressive shift in the strength of the trend. Again, we have this long wick to the upside, indicating the price went quite explosive to the upside, and then the body closes very low down on the wick, indicating that this entire area of uptrend, this entire area of price action was bought up or sold off by the bears, and the price came all the way back down very close to the opening of a closing price of the prior candle, and it does signify aggressive shift in trend. So we have seen that here, again signifying that the trend aggressively shifted to the downside. After that, we saw quite a brutal drop over the last 24 hours, back down to its uptrending support. Now the location of this candle is quite relevant, okay? If you take a look at the location of the candle actually occurred just as the retest of this June to November low area. So the June to November low area acted as a major resistance for the recent price action, particularly a swing towards the upside. So this could act as a resistance support flip. Breaking this trend line now over here will confirm that this rejection, this retest, was a resistance support flip of the entire June to November zone. That will facilitate a continuation towards the downside. So it's getting quite nasty. Let's go ahead and take a look at an example. You know, a prior time we saw a very similar candle on the chart over here. We can almost say over here, the August 13th, we saw a similar long-legged doji candle. We saw an aggressive downtrend continue. It generally happens at the tops and bottoms of aggressive trends. We saw another long-legged doji candle print over here. Again, we went into some degree of uptrend consolidation before we came back down. Again, we generally see these candles print at the tops and bottoms of aggressive trends. You can see them occur within trends, but they don't hold much significance unless they are printed at the tops or bottoms after extensions within the current trend. So if you have an uptrend and then you have an extension of the uptrend, okay, so a period of rapid price action or a surge in price action at this uptrend, and then you print this candle, it signifies that top point is in. Same at the bottom. If you have a slow, steady downtrend, and then you have a surge in the downtrend, and then you print that candle, it generally indicates, okay, that is a reversal point for this trend. The price will continue in the opposite direction from here. It's generally quite accurate. So that is how you can use those candles. So it is signifying, again, a reversal in your structure. It's signifying a potential reversal support resistance flip, which of course is a bearish structure. So relating that to the small time frame, what is it telling us over here? Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. Well, technically we are still in a uptrend, okay? We have to keep this in mind. Technically we are still in an uptrend. So whilst we remain in an uptrend, these upward targets are realistic to be attacked again. It is realistic to expect a swing to the upside once more, okay? I will be, again, more cautious for anything for longs until we are able to reclaim these upper levels. Really would need to see the price reclaim this horizontal resistance range, this June low, before you start getting aggressive with longs again. I would not be getting aggressive with longs for now. After what we just saw, quite a heavy rejection, basis point rise, the market's not looking too good. There's a lot of stuff going on in the market here. S&P 500, Dow Jones rejecting, DXY looking like it's spinning around, bond yields are looking pretty decent again for reversals, Bitcoin obviously decreasing in strength as this uptrend continues. It loses strength as we are unable to break through these major resistances. Okay, so what I'd be looking for now for downside is obviously a break and loss of this level. I would say very clear shorts below this bottom over here. So waiting for the price to break this level, very clear shorts taking us all the way back down here. So if we go ahead and bring up the VRPV, we can see, for some reason it didn't pop up. If we go ahead and bring up the VRPV, what we can see, particularly if we go ahead and increase the row size, taking a look at the POC level is, the POC level is sitting kind of in between these points here, okay? So I'll be waiting for a break of this higher volume range, which is particularly this chunk over here between these two horizontal supports, which of course is making up that lower support and upper support. Breaking through that level, we will most definitely see a loss of this POC, potentially a little bit of support over here. But as we can see prior to this, we have seen quite aggressive drops from that POC level once we lose that. So we can expect that drop to take us down into these lower ranges if that does occur. Until then, guys, we are in an uptrend. I'll be looking for points of reversal. At the moment, I can't see anything. If you do have you know, a little bit of risk tolerance that you are happy to play around with, taking a long from here with a very, very tight stop underneath this uptrending support line could be a decent bet if you're looking for longs. Personally, I'm not looking for longs, but if you're looking for longs, that could be a good bet. Again, targeting these upper levels over here, targeting this gray box as resistance range for your exit points for those longs. But again, definitely be a little bit more cautious here taking longs with this uptrend coming to an end pretty soon. Hopefully, we do have a lot of trend strength. We have the trend weakening. That's one fact of the matter, and of course, we have got quite strong rejections from these horizontal ranges above us. For us to see any sort of swing to the upside on the macro, for us to become more confident in what we're looking at on the macro chart, we do 100% need to clear this horizontal range. And this isn't fact, this isn't opinion, this is pure fact, guys. We're not here telling you what we think, we're telling you what the chart is saying. This is one thing people need to get straight about. I'm not on here telling you what I think. I don't care what I think. I'm telling you what the chart is saying. I have my own personal opinions. I keep my own personal opinions separate to my analysis on these videos. I'm purposely only analyzing and telling you guys what the chart is saying. Think of me like a translator. It's a different language. I'm translating that language to you. This is what the chart says. The chart says we have significant resistance on this June to November low. Why would you take a long pushing into major resistance? You're longing into resistance. That is not a smart thing to do. It's common sense, okay? So you should be looking for shorts as long as we remain below this resistance and up above this trend line, okay? The moment we lose this trend line, this uptrending support line, we've got confirmation that this was a rejection, it was a support resistance flip. We've lost this uptrending support line we've been developing over the last month and a bit, okay? That would be confirmation that you should be looking for short. For the upside, for confirmations of longs, we need to destroy this larger time frame structure. We need to push above not only the 19,000 POC, which you talked about already, right? Which basically completely lines up with that 10.34% level that we need to reclaim on the quarterly, okay? But you also need to break through that June to November low, as well as this entire structure, which is this downtrending resistance we see on the chart over here, okay? This falling wedge structure. Breaking through those three things will confirm the breakout of this larger time frame diagonal trend line, which is actually our trend line for our bear market, okay? So we do need to see a consecutive break over these three things before you look for larger time frame longs. For smaller time frame swings, go ahead and knock yourself out. But we're talking over here for when is the best time to be looking for larger time frame longs, when is a good time to be looking for larger time frame purchases, accumulation of Bitcoin. That is what we're waiting for. Do not jump into market when it starts to look good. Jump into the market when it is good, because remember, as the prices swing from lows to highs, okay? As the prices swing from lows to highs, it is natural that the technicals are going to it is natural that the technicals start to look better and better, okay? But again, technicals don't tell us market structures, they don't tell us where the price is going, they simply tell us the strength of the trend. So if you're relying on the strength of the trend to tell you where the price is going, you're going to be mistaken, as the technicals always look good as the prices are swinging upwards, just as they did here, okay? Just as they did here. That is why a lot of people were expecting 100K, because the technicals are looking great. That is why a lot of people are expecting this to be, you know, that bear market bottom, and we're going to go up because the technicals are looking good. That is why a lot of people thought we're going to break out over here again, because the technicals were looking good. The reality is, guys, technicals don't tell you where the price is going to go. They tell you the strength of a trend. So as we'll see movements from bottoms or lows to swing highs, we see technicals look better. You should use your technicals in conjunction with your market structures, your support zones, your diagonal zones, your horizontal zones, to indicate points of where the price action actually looks better in relation to historical support resistance zones, because that is where the price is going to move, through these volume ranges. The technicals tell you the strength of a trend, they tell you how likely it is that this trend is going to continue throughout this bottom to low period, this swing. It's not going to tell you whether it's going to break this point, okay? So keep that in mind. Do not get overly bullish as we approach resistance. It's very easy to get overly bullish as you approach resistance, because once again, the technicals do start looking better and better, but it's very important that you are aware that what determines whether or not the price moves upwards is not the technicals. The technicals are a mathematical reflection of what the price action is doing. It's not a tool to use when it comes to foresight for what the price is going to do. Okay, keep that in mind. I'm gonna leave the video, guys. I won't be here tomorrow. It's my girlfriend's birthday, so we're celebrating her birthday, so I won't be actually here doing a video. So I'll catch you guys the day after. Stay safe, watch your charts, and of course, I'll see you in the Telegram channel. Cheers.